Hi, Adam Collingwood here. In this video, I'm going to run through the full Trader's Edge formula ecosystem. So I'm going to be going very, very quick from start to finish, how the whole thing works, step by step by step. But you're going to need to keep up with this as I fly through every single part of the whole process and how you calculate all of your numbers from start to finish. Okay, so this is going to be amazing. Keep up, watch right to the end, don't miss a thing. Okay, let's get going. Okay, firstly, what we're going to do is we're going to go to the 0 to a million blueprint. And why this is important is that most traders that I come across have no idea how much money they're going to make in the future. They've got no goals. They just start trading and hope for the best. They don't start thinking to themselves, okay, where do I need to be in 12 months, 3 years, 5 years? So they have no idea. They just start with a sum of money, or they might start some prop challenge and have no idea where they're going. So what we're doing here is we're looking onto the horizon. Where is it you want to be in the future? Where are you right now? And this is how we actually bridge the gap. So the starting place before you even get into the numbers or even your strategy. Okay, so 0 to a million blueprint. So what you do, you start with the amount that you have available to trade with, and we work from there. So if we're looking at the calculated future value, let's just say you've got £10,000 to begin with. Okay. So what we're going to do is we'll just put 10,000 in here. We're not going to put any monthly additions in at all. And let's just say your monthly target is 10%. Okay. You might think that you can get to 10% per month trading. Most people get haphazard returns each month, but let's just say it's 10%. And in the future, you want to give yourself 3 years. All right. So you're not going to take any withdrawals because I've built into this a point in the future where you can take withdrawals. Not taking any at the moment. So what this is telling us is that if you started with 10,000 and you made 10% a month, then your final account balance would be 309,126. That's the compounded growth return. Monthly return, 10% compounded up would give you an annual equivalent rate of 213% over the 3-year period. Okay, there's a compound interest graph to show you that. Here's the monthly breakdown. So 10,000, you end up 11,000 if you made 10% after month 1. Month 2, you've got a different target now because you've got a bigger balance. You've now got 11,000 to play with, and you now need to make 1,100 for the month. So your new balance will be 12,100. You get to month 6, you've now got a compounded account balance of 16,000. You make 10% that month, you now need a bigger figure. So you now need to meet 1,610, whereas initially you only needed to make 1,000. This is what the final account balance will look like, 17,715, and so on. Okay, so I've built in here a breakdown of what this would look like going forward. So you've got a detailed statement, and there's also a yearly summary of what it would look like as well there. Okay, so compound interest being the eighth wonder of the world. According to Weinstein and many others, Warren Buffett didn't become rich until his 50s, literally because he bought shares at such low prices and everything just compounded up, and eventually he became a billionaire. So ask him, read his books, and he'll tell you about compound interest and why it's so important. Okay, so let's just say that you're not going for a fixed return. Let's just say you want to find the return. 10,000 is your starting capital, and you want to get to 500,000. But what you're going to do is you're going to give yourself, say, well, how many years should we give you? 5 years. This is where you're building wealth slowly. It's not a sprint. You're trying to make it all on day one or in month one and suddenly become rich overnight. If you think that way, give up trading now because it's not going to happen. Okay, so that's the reality. So what this is telling us is that you would need a required monthly return of 6.737%. Do you think that's achievable? I do. Definitely achievable, 6.737%. But it's going to take you 5 years to do it, and you need to do it systematically. Okay, so that's the compounding effect. So it starts off very, very slow, and then eventually you'll get to the point where account balance after 12 months, month 18, the balance is 32,000, total contributions 10,000. And then when we get to, say, month 42 here, you would have account balance 154. Okay, bearing in mind you started with 10,000. So it's not until later on that this really, really builds up. And then what you can do is you can look at the monthly breakdown and it will show you exactly how this account's building up over a period of time. So the bigger the account balance, the more chance you have of getting to that goal. But you need to do it systematically, as I've said at the top, systematic path, not sprint, not let's get rich tomorrow. Okay, it ain't going to happen. All right, it has to be done methodically and well thought out. But this is your starting place to be able to do this. If you want to take withdrawals in the future, we can build into this withdrawals. I'm not going to get into that in this video, but it's absolutely crucial that you know that you can take income at some point. It's completely tax-free if you're in the UK, if you're trading a spread betting account, but a lot of people are trading challenges. So if you're trading a challenge, what you would start with is, say, if you're trading 100,000 account, on that 100,000 account, nothing added to it at all. Let's just say you wanted to get to 1,100,000. Okay, the reason why we say 1,100,000 is because your 100,000 you're starting with is a pot firm's money, not your money, because you've got a funded account. Okay, and let's just say on there that over a period of 3 years, so over 3 years to get to 100,000, you would need a 6.88% return. Now, bearing in mind that you only get an 80% profit share with the prop firms, so you would need to take that into consideration. But for you personally, with the 80% profit share, 6.88%. Now, let's just say you wanted to do that over a longer period. So over 42 months, that would take you, which is 3.5 years, that would be 5.875%. Let's just say you did this over 60 months. Okay, then that's showing that you would need a compounded return of 4.077%. If you want to look at the numbers again, you can go into the monthly breakdown. That will show you everything, how much you need to make every month and so on. What you can also do in here is you've got the scenarios. So you can run different scenarios. So let's just compare 4 that I've already put in here. You can see, if you compare them side by side, this is showing a 500,000 starting capital over a 3-year period, monthly return 2%, annual return 26.82, total contributions 500,000. That's how much you've made. You've now got 1 million. Okay, this one 500,000 over 5 years with a monthly return of 2%. This one, your balance would be 1,640,000. On this particular scenario, starting with the same amount over a 5-year period, you'd only need a monthly return of 1.16%. Can you see the difference there? And the interest that you would have earned is 500,000 just to get to 1 million. If you wanted to get to 1.64 million, you'd need a 2% return. But with a 500,000 starting amount, 1.16% just to get to that million. All right, and it's tax-free if you're in the UK with a spread betting account. All right, so very, very achievable. You should be able to get very easily 1.16% per month return, compounding methodically. And then the final one is over a period of 5 years, monthly return 1.54%. So over that 5-year period, only 1.54. Okay, only 1.54. That's nothing. Just over 5 years. All right. So we can close the comparison there. You can do all your scenarios in here. And then what I said before is you can put in withdrawals and points that you can take that in the future. This is completely intuitive. You change any numbers that you want. And can you see on the right hand side, everything changes. All right. I built the whole damn thing myself over 18 months, not just this and everything else I'm going to show you. All right. So this is all well thought out. It's so, so important when you're trading and you're looking to build wealth for yourself. There's also a tutorial built into this as well, just showing you how all that works. Okay. But it's so, so important to build your financial plan as to what you need. The next one, what we're going to do is, because we know the numbers there, no, we're not going to do the account Drawdown Defender yet. We're going to do this one, the Trader's Edge formula. So now that you know the numbers in here, okay, you've got an idea as to how much you need to make every month. So you're going to be doing it methodically. So let's just start for, let's just start at 100,000. Okay, so 100,000, and we'll say you want to pass a prop firm challenge 10%, and you need to know how many days you're going to trade for. So let's say it's 20, okay, and you're going to do 2 trades a day. Could be more, could be less. And the amount that you're going to risk per trade is, say, 0.5%. and your risk reward ratio is what, 1.5. You'll aim for more than that, of course you will, but you've got to be real and know what your rolling average is. We'll get into that in a bit. Okay, so what this is telling us is that just putting those inputs in, your monthly return would be 10,000, 10% of 100,000, weekly 2.5, daily 500 per trade, 250. Risk per trade. This is important when you position size. You cannot risk any more than 0.5% of this 10,000 account. You cannot, because this is the problem traders have. They're risking different percentages on each trade. Oh, this setup looks good. I'll risk 1%. Oh, this setup doesn't look too good. I'll only risk 0.2%. If the trade isn't setting up, don't risk anything. All right. You only risk it on good trades. They'll give you an RR that is decent enough to make it worthwhile. Otherwise, don't do it. Okay. So £750 is the reward you get using the risk reward ratio of 1.5. We're simulating this on 40 trades. And what this is telling us, for you to get the 10% for the month, you need 24 winning trades at that risk reward ratio of 1.5. And that's a win rate of 60%. Okay. Can you get that win rate to be 60% to do that? Now, you can change any one of these numbers. Let's just say you only needed 2% a month because you've got a nice juicy personal account to trade with. You're not going to go crazy like somebody I know who blew 2 million trading a personal account because they didn't have a clue what they were doing. If you were going to do this properly, I'm hoping that all traders trade properly and not gamble. All right. So let's just say that the same 100,000 in your tax-free personal account, and you're going to do 40 trades, and you're only going to risk 0.3%, but you're going to try and get a decent-ish risk reward ratio. We're going to leave that at 1.5 for the moment. Okay. So this is telling us that you would only need 2,000 per month. And bearing in mind, we've done the numbers before. We can go back and flick between the two. Okay. I've kept them separate because they work very differently. We can say with that 100,000, well, I only need to get 2%. Okay, so you got 2%, and we're saying what that would be worth over a 5-year period. That account of 100,000 would be worth 328,000 over that period of time. If we change that to 3% a month, then you're getting to 589,000 account balance. So we can see the compounding effect of that. Let's go back to here. So what would happen if you needed to make 3% a month? Well, you would need a 50% win rate from 40 trades, 20 winning ones at a risk reward ratio of 1.5. But bearing in mind, you're only risking 0.35% of the account. If you change that number to 0.5% of your trading account, your win rate then reduces to 46%. So now you only need 18 out of 40 winning trades. What about if you increase your risk reward ratio? Fantastic. If you can get an edge on your strategy and you're now getting up to an average risk reward ratio of 1.8 to 1, you'd now only need 16 out of 40 trades, which is only a 41.1% win rate, and that would achieve your 3% target. Now, because you may not know what your average rolling risk reward is, most people don't when I ask them, you can track everything in my performance journal, which is just here. This tab is where we can compare different scenarios. So we just go in here, a bit like the 0 to a million calculator, and you can compare the different examples in here as well. I'm going to get into all of that because I want to make this video as quick as I possibly can because there's a lot to get through. Now, performance journal. This is where we can add all of your trades in here. So very simple to use. Say if you made a trade, you haven't added it in there and you're trading, let's just say you were trading the DAX and you won on that trade. And let's just say it was 23,8943 and your stop loss on here is 23,874. You're going long, and your target on that trade is 29,931. So you're looking, sizing up a trade. You can just put these numbers in here and it'll quickly tell you what your RR is. And in this case, it's 1.85. Again, you can tweak these so you can see that changes depending on where your TP is, where your take profit target is. All right. And then what you would do is you would add that into here. And then let's just say that it hit your stop loss at 23,894. And then we're going to say that was a loss there. Add the trade. So that trade will be added over here. And then we'll see that reduces your win rate tells you how many running trades that you've got there. And now your average RR is 1.52. So why is that so important? Well, it's important and people don't actually track it, is you need to do it every day. All right. You have to do it every day religiously. It's so important because we know what your RR is on each trade, or what is the rolling average. So we're now on the 17th of December. This is telling us that our average 1.52 rolling RR across 13 trades. So if you were looking on your chart at a moving average, whatever period you're looking at the moving average over, say if it's a 5-minute chart and you're looking at the average, the last 50 close prices, and you want to work out what that average is to see whether it's trending, then that will do that for you. But what you've got to do in this case is see from trade to trade what that average is running at, because at the moment it's 1.52. So if we go back to the edge calculator, we need 1.8. So we got some work to do because we're not going to get that target, are we? So all those numbers are going to be skewed. We're not going to achieve the targeted return that we need to. All right. Again, this is a whistle stop tour. I'm going through this really fast. Everything's archived, so you can go in here as well. So these are previous ones, just showing 11 trades made, 72.7% win rate, 1.59 RR with an expectancy of 0.88 R. Okay. And so you can see that all those trades are recorded in here with the RRs on them and so on. So I'm going to close that now. This is key. This is all about the tracking. And what you can also do with this is, say if you've got a strategy that you really like, and you think, oh, I'm going to now use this one to try and pass a challenge with, or grow my personal account with. Well, hold on a minute. Back test it first. Go and back test on your charting software. I use Pro Real Time. You can go back and look at where you would have entered, where your stop loss would have been, where your take profit target is, and then just track all of that. And then what you do is you just keep adding all of this into the journal, track those 100 trades, 50 trades, or however many you're putting in there. And that will tell you what your RR was and whether you would have achieved the return that you needed to. So what you could do also is put that into the Trading Strategy Analyzer, which is another bit of software that I've built. So you put all those numbers in here as to how much you would risk per trade. So you can test all of this, what your win rate is and so on, your average risk reward. So whatever those numbers turn out to be, you can quickly run it through here and say, okay, well, we back tested that on 40 trades over what period? Well, let's just say that it was a month. And this will tell you what the return would look like across those trades, what the performance would have been. Okay, so important this. It will tell you whether you'll be on track to achieve the numbers. So in this case, the final account is 10250, starting with 10,000, risk per trade 0.5%, win rate 46%, risk reward ratio 1.5 to 1. So your final account would be 10250. Okay, so these are the statistics, strategy metrics, etc. If you wanted to simulate this over, say, a 12-month period or whatever period you want, this will show the account growth. You'd make 34% over 12 months, which would be 3,449. So you'd have made 480 trades. That's 40 trades per month, win rate 46%, 216 wins, 264 losses. But your monthly return would be 2.8. And then as you can see, the compounded return over that point is just up there. You can also look at the monthly breakdown of everything. So wins, losses, and so on. So it's got all of the information. I have thought of everything. Okay, absolutely everything. So you can see how to use this as well, how to use Trading Strategy Analyzer, risk tolerance, review the performance tabs. So then we go back to calculate. And then in here, we can look at how you can optimize it. So with this, on the left-hand side, vertical, you've got the return, and horizontal, you've got the win rate. So if you increase your win rate to 60%, then you can see the return would increase on that. So you can run all sorts of analysis on this, and these are the key findings built into it as well. All right. So that's the analyzer. So what you've done is you've done all the back testing, run the numbers and see whether you would achieve the return before you even start and waste another challenge fee, or before you even trade any of your own money in a personal account. What is the point if you don't know what your potential return is going to be? If you haven't back tested your strategy, you haven't done anything really. You haven't done any analysis. Why do you think it is that 95% of people who take a trading challenge fail? Why is it that prop firms make most of their money literally from people paying fees to start a new challenge? At the 5% that do pass, statistically, I don't know the exact numbers at the moment, but what I do know is that most of the 5% who do pass don't have funded accounts for very long. Again, because they might be good traders, but they don't have a system, they don't have a formula. This is why I'm going through this with you. 18 months of work on this. This is how important it is. So that's the trading strategy analyzer. So that's the formula. This is the trading account drawdown defender. This is one of my favorites. Okay. How many times do people go into drawdown and they start panicking and they can never recover, and they end up losing the challenge again and again and again and again because they don't understand the metrics? Let's just say you're starting an FTMO challenge with 100,000 account. Say you're going to risk 1%. We're going to run infinite Monte Carlo simulations so that we can see all the random sequence events that can happen. Monte Carlo is powerful beyond belief because we know that in sequence of events there's always random outcomes. There's no difference with trading, because with trading you can do 40 trades. You might get first trade 1 win, trade 2 loss, trade 3 loss, trade 4 loss, trade 5 loss, trade 6 win, trade 7 loss, and so on. And there will just be a sequence that will be completely different. Every time you run another 40 trades, it will be different. Sometimes you have winning streaks, losing streaks, and then the mixture of all of them. So what we're going to say here is got 100,000. You've done the numbers, you're tracking everything, and it's telling you that your risk reward ratio on a rolling basis is only 1.3. You're risking 1% on a trade. Your win rate is not great at the moment. Let's just say it's like 38%. All right. You're risking 1%. So what we're going to do is we're going to run the simulation on this. And what this is telling us is you have an impossible negative edge. Do not try and take a challenge. So if you've done the back testing, all right, run it through here and say, oh, I'm going to risk 1% per trade. No, don't do 1% per trade, because this is telling you you are going to lose the challenge. You're going to lose money. All right. So 6.4% is what the drawdown is. And we're going to run the safety checks on this. So basically there's 2 tabs here. The run safety analysis is saying statistical analysis across 10 simulations, you will fail the challenge. Okay. 0%. You will never, ever pass the challenge with these metrics at the top there. Okay. It's just not going to happen on 38% win rate, 1.3 risk reward. If you did 50 trades, sorry, my friend, you have failed every single time. All right. Average balance 92, 150, average worst drawdown 8.2%. Your average expected return is that. Just stop trading. Overall, your total drawdown is 10.08. You failed the challenge. So it's not going to happen. All right. The proof of it all is you can see across those 40 trades, we just have to click on any one of these. At the moment, so you get to trade 4, you're already at a loss of 3.9%. By the time you get to trade 8, you're at a loss of 5.6. Oh, yeah, happy days. You just made some money. You close the trade down, you're back improving in balance again. And then suddenly you get a sequence of losing trades. And then as you move along from here, what happens is you click on any one of these sequences. So in trade 15, lost 5.7, trade 19, lost 9.4. And then by the time you get to trade 22, you're out of the game, you've lost 10.1. And that's just literally running this across 50, but you were out by 21. Okay. Because of that and that. Okay. Risking too much. Risk reward ratio is only 1.3, win rate 38%. These numbers don't lie. You have to do them over and over and over again. We can run more and more simulations. So we run another one. Worst drawdown point on that one is 6.4. Let's run another simulation here. So worst drawdown point 9.96. Run another one. It's 8.52. This is a different Monte Carlo simulation. I hasten to add dangerous map parameters. Either negative edge or breaches approach limits do not use for challenges. Okay. I've programmed all of this in so it tells you everything, whether you've got a mathematical edge or not. You've back tested your strategy, and it's telling you, sorry, you're not going to pass the challenge. Do not pass go. All right. But let's just say you run some different numbers. Let's just say, you're risking less per trade. Say it's only 0.3% per trade. And let's just say your win rate's 48%. And you're really improving your average risk reward per trade to 1.7. Let's run the simulation on here. So what's that telling us? It's not great. Run again. This time, 4.50%. Okay. But will you pass? Well, what this is telling us is that by clicking on Run Safety Analysis across 10 simulations, your profit will be 4.5, but what you won't do is you won't fail the challenge. So that's what this is for. So on this one, 4.5%. Okay, so that's all we do. We just click on that, and it tells us that the challenge will be safe, but you won't pass it. You're not going to get your 10% yet. But the whole purpose of the Drawdown Defender that I built is to show you what would happen if you risk too much per trade, if your win rate's too low, if your average risk reward, rolling average risk reward is too low, and so on. But of course, you're measuring it, aren't you, every day? So you can tweak these numbers as you're going along from trade to trade. And if your strategy is shit, then you can, do something about it, get a better one. But don't risk any money. Don't risk any money. Don't try and pass another challenge unless you've done this, because otherwise it's just going to be doom and gloom for you. Okay. More of the sleepless nights, waking up, why am I trading? Why am I doing this? You start with excitement when you do another challenge. And then by the time you get to week 2, it's all curtains again. All right. So in this case, it's okay. But then what you can do is you can say, well, if I'm risking 0.3, what if my win rate's 53%? What if I can get my average rolling RR to 2? Okay. We run the simulation on that. Hey, that looks better, doesn't it? 9.68%. That's what your balance would be. You now only need 27 out of 50 winning trades from the 53% win rate, risk reward ratio to 0.3% per trade. Okay. So now you're risking less, you're improving your win rate and your risk reward ratio. You're also improving that as well. And then we run this. Okay. And now what this is telling us is, again, all safe. Okay. So 2 important tabs here. This one, run another simulation, worst drawdown 0.0. Okay, run another one, 0. Run another one, 0.9% is the worst drawdown. And when I say the worst drawdown, what I mean by that is that you can go into here. Every time you click that button, you will see a completely different sequence, a different Monte Carlo sequence, because we'll swap all of those around all the time, because you'll get winning, losing trades, winning, losing trades, winning, losing streaks, etc. All right. And then on every single one that we press, it will tell you profitable trading sequence. Congratulations, Monte Carlo simulation resulted in a 9.68% profit using that formula. Okay. Using that formula. And of course, it's a work in progress because you're tweaking it all the time, because what you've done is you're doing the numbers in here, and also you're tracking everything with the performance journal, which is in the Trader's Edge formula, okay, then the simulator. All right. So you're always able to change the numbers as you're going along, and you'll know quickly if things are going awry. So once you've done the numbers in here, and it's telling you you're only on 1.52 at the moment, okay, but you might say, okay, 1.52, so yeah, 69.2% win rate. So if that was the win rate, happy days. You know what the answer is going to be. If you got a 69% win rate, it's great. But what about the risk reward ratio? We said at 1.54. So let's just simulate that. Yeah, you see, you'd hit your target. You'd hit your target. So you run it across all of these just to see where you'd be at, right? So those are all of them. There is the position sizing calculator. This is kind of like the Swiss Army knife one, where literally what you do is every time you've got a trade setting up, you can just put in the entry price there. So say if it was, 24,076, and then risk percentage 0.3%, trading in DAX, entry price 24,076. Your stop loss is going to be 24,056, and then you're going to take profit. We'll call it 24,100. So that's telling you is a 10,000 account there, and you're risking 0.3%. You're going to risk 30 quid on that account. You're risking 20 pips. your average risk reward ratio on that is only 1.20. So you might think, I'm not going to do that trade at all. But it also tells you the maximum you can risk per pip. Because of course you're risking 20 pips, £30 is £1.50 per pip. That's how much you've risked. Potential loss is 30 to get 36. Now, what if your take profit target was 24,143? Change those numbers. And now that's much better. It's telling you that your actual risk reward ratio on this trade is 3.35, which means risking 30 quid to make 150. If you want this calculator, let me know and you can have it. Completely free, but it's so important. As I say, it's your Swiss Army knife. So very useful. But with the Trader's Edge formula, you can do these numbers in here. So we can type those in and then this will calculate it for you as well. Okay, so that does it all within here in the Trader's Edge formula, but as a standalone one, that's the position sizing calculator. All right, so there you have it. So from start to finish, step 1, 0 to 1 million blueprint. This is where you're planning. What it is you want? Where are you at the moment? Where is it you want to be in the future? Not even gone into the withdrawals on here. This is very, very powerful once you're starting to build up wealth and you can assess when you can start taking an income and whether that will affect the compounding effect of this. So once you know all of these numbers and you really have a very clear target, make sure you've maybe done a vision board of all the things that you want, where you want to go, holidays, what type of house you want to live in, financial security is so important. Yeah, all of the good stuff, all the reasons why you're here on earth, to have an amazing time, enjoy life and so on. And this number will drive everything. Whatever you put in here will drive your goals and build your wealth for you. But you've got to do this exercise first. All right. Trader's Edge formula. So now this is when we get into the nitty gritty of making it all happen, where you go into the Edge calculator, did everything that I've just said to you in there, change any one of these, everything. Look at it. Anything you change on the left here just changes on the right. It's also mobile friendly, so you can use this on your phone. You can use this just in your browser on your iPhone. All right. As I said, you do your scenarios in here as well. You compare all of those. You can do up to 4 comparisons in there, or you can create as many scenarios as you want. You've got the amazing performance journal, which tracks everything. And then you've got everything saved in here in your monthly archives as well. With those scenarios below. So you can see how beautiful this all is. Built it all myself, designed it myself, started from vision to concept to all the design of it. And I also built the whole thing by coding everything. All right. Started off with spreadsheets. In case you don't know, my background was I was an IFA many years. I built financial models. I did a lot of risk management. I had about 40 million that I managed of other people's money. I then pivoted into trading, made a lot of mistakes early on. I thought it was going to be easy. It wasn't. It's a completely different animal. Slowly but surely I got there, realized it was all mathematical. Everything was mathematical. And I've been wanting to build something like this for a long time because I know the problems that traders have, because I have been one myself and I'm still one. Okay, I do coaching all the time. I run through all of this, but we start with this as the foundation before we get into the strategies. All the strategies that I use are all fully back tested, the day trading ones, swing trading strategies and so on, so that we can derive all the numbers that are actually in here. Okay, so that was a very fast moving whistle-stop tour of the Trader's Edge formula. The sun's come out, which is fantastic considering all the crappy rain that we've been getting in the last few days. Just getting drenched every day. I don't like that. I prefer just the cold weather and the lovely blue skies and, sun coming through. So there's a bit of a shadow on my face, I can see at the moment. Anyway, I hope you enjoyed that. There will be links in the description below. If you like what I'm talking about here, if you understand the importance of it, the whole Trader's Edge formula ecosystem, you will know how powerful it is. My goal, my mission is to stop as many traders globally from losing tens, thousands, hundreds of thousands of pounds because they do not have the proper foundation in place. They don't run the proper numbers. They don't back test properly. They don't journal. They don't measure. They don't track. They don't hold themselves accountable. Everything is done on a whim. It's all literally gambling. It's just hot luck as to what the outcome's going to be. I have thought of everything. Okay. What this does is ensures that when you're in trades, when to let them run, where to put your stop loss, when to cut them short quickly, because everything is precision engineered. The whole thing has been reverse engineered here. That's how I've built it. And we can track everything, okay? On a day-to-day basis, we can back test everything. And then we can also do this live from a day-to-day basis. And if things are going awry and not getting where you want to get to, then you can tweak it as you go along. Or if you get into drawdown, as many do, deep into that and thinking, oh my God, what am I going to do? Well, if you've already done the stress test with the Drawdown Defender, you'll know that you can get out of that, that it's just purely part of a Monte Carlo sequence that's running. But if you have a bad strategy, I'm sorry, my friend, you will not get out of that, and you will just fail another challenge, or you will just lose another personal trading account. I want to stop that from happening. I want to help as many people globally to be able to pass these challenges by doing it the right way. And I want to save people who are trading their own personal accounts, then blowing them up and losing more and more money. And in some cases, just becoming so depressed, losing families. I mean, it's just terrible because people love trading. I love trading, but you get it wrong and it's brutal. Okay. Do it the right way. Follow this way. This is the way. Okay. I'm creating a movement. Be part of that movement. And I look forward to speaking to you again. If you have any questions, leave them in the comments below. Ask me anything that you want. Tell me whether you like it. If you want to test drive the Trader's Edge formula, I am offering a few free test drives. The subscription you'll pay for, I'm not doing it for nothing. I've spent 18 months of hard graft, thousands of hours working till the early hours of the morning to build this beast. And, it's amazing, absolutely amazing. I love trading. I love coaching. I love helping people. And as I say, I want to create a movement. If you're not subscribed to the channel before, please subscribe. It's only a small channel at the moment. I would like more subscribers. Otherwise, what's the point in doing videos if it just falls on deaf ears? I'm just wasting my time otherwise. So that will help for other people to see them. If you think anybody else would find this useful, then please share with them. As I say, if you can like the video, it just helps with the algorithms. Okay, so that's just me saying that'd be lovely if you can do that. All right. So I'm going to end this now. And I'll speak to you again soon. So if you've got any questions, let me know. Please subscribe. Please like if you want to. And happy trading.